Novethic annual event, the 8th edition. I'm very pleased to welcome Mark Halle. Hello, Mark.
Hello.
You're the director, executive director of the International Institute for Sustainable Development, and you're working on the UNEP inquiry. Maybe a few words about this, the ambition of the inquiry.
So the UNEP inquiry stems from the economic crisis that began in 2008. And out of that, UNEP conceived this idea of greening the economy, moving towards a green economy. And it was very quickly obvious that you couldn't have a green economy with an old-style financial system.
Why not?
Well, because the masses of money that are going into investment are either going into clean investment or traditional investment. And until you can make finance flow on a large scale to the green economy, it's very unlikely that it'll be anything but a sort of boutique market. So the inquiry set out to ask two questions. What will it take to get investors on a large scale to put their money behind green solutions? And secondly, what are the sort of reforms to rules or policies or incentives that we need to put in place that will allow that to happen?
So what are the answers of these two questions?
Well, the answer is that
what would it take? First.
It would take substantial reform to current practices. The way in which banks are governed, the way in which capital markets are governed, the way in which institutional investors
The answer
function.
Is regulation?
No, the answer is much more incentive. The answer is to adopt policies that help align the financial sector's interests with the public interests, namely sustainable development.
And do you have some concrete examples that works and that goes into this direction?
Yes, so for example, many investors say we would like to fund green projects, but the risk profile is too high. And so, for example, in Brazil, they have introduced what they call investor liability or lender liability. They've introduced a law that makes the investor responsible for the environmental impact of the projects in which they invest. As a result of that, of course, they then value environmental risk much more strongly, and projects that are too risky from an environmental damage point of view are dropped in favor of greener projects.
It reminds me a little bit the carbon market in a way. It's a way to introduce finance to measure some liabilities.
That's right. So what you want is for investors to conclude that the best investment is in green technology. So you have to lower the risk of green solutions, but raise the risk of dirty solutions, and like giving value to carbon.
And does it put into the forefront the emerging countries with such a new way to finance projects?
Yeah, so the UNEP inquiry looked all around the world for the best examples of what was happening, and to our great surprise, we found that perhaps the most inspiring, the most innovative, the most daring solutions were being experimented in developing countries, including poor ones like Bangladesh, or in emerging countries like Brazil, South Africa, China, India, and others.
How do we explain this? Is it because it's a blank page?
No, I think it's because those countries are very, very aware of the fact that they have to deliver employment, they have to deliver social inclusion, and in Brazil, a natural resource-based economy, they have to maintain that base. So the future of their populations is much more in the minds of policymakers than it might be our bankers here in the United States.
Thank you very much, Mark.
Thank you.
Bye-bye.